Today we're going to talk about tax withholdings and tax refunds. So this is a very timely topic as we are right in the middle of tax season where you may have filed or are filing very soon. You're going to find out what that tax bill is or what that refund might be. You're going to get that tax return back and get the results back from last year. So tax withholdings and taxes in general are kind of a black box to most people. Most people kind of just do their thing throughout the year. They give their stuff to their CPA tax preparer, or they go through TurboTax and they just, it spits out a number and we hope it's good, right? And good for most people, they think that good means refund, right? Refund means good. Getting money back means I did good. Good job. That is not the case, okay? Getting a refund or owing taxes isn't inherently good or bad. You are just settling the bill with the IRS from the previous year. So I want to point that out. There's no inherent good or bad thing. We are just settling up our bill. Now, in my opinion, I don't want to owe a large bill to the IRS that actually is bad. I might owe penalties. I also don't want to have a large refund. That means I gave the IRS my money throughout the year that I could have had in investments like stocks. I could have had that even in a high yield savings account. I could have just had more cash flow for my family to go on a vacation. Why would I give that money to the IRS when I don't necessarily need to with just a little bit of planning and foresight? So today we're going to talk about refund versus payment. We're going to talk about tax withholdings. We're going to talk about making projections and adjustments. And then we are going to talk about a little bit about the impacts of good tax planning. Okay, so we touched on a little bit refund versus payment. I'm going to go through an example of kind of what that looks like in conjunction with tax withholdings. So the example that I have is two spouses. One is active duty, so they're getting, one LES. They're getting a paycheck every 2 weeks, but they're getting one LES every month. Other spouses biweekly, works a civilian job, so they're getting 26 pay stubs. So period taxable wage is going to be $8,500 for spouse one. Spouse two, it's going to be $7,900. Withholdings, $2,500 and $1,500 for federal. And then state, I put them in Colorado, state withholdings at $300 for each. That's for that first pay stub. So just doing basic math, like multiplying, extending that throughout the year, we can figure out that their total taxable income for the year is going to be $307,400. Okay. Their federal withholdings are going to be $69,000 and their state withholdings are going to be $11,400. So just by taking your pay stub, understanding how many periods you have throughout the year, we can very easily project what that taxable income will be and what those withholdings will be. It's basic, simple math, Excel math, like 2 steps. Once we do that, we have to do the more onerous and difficult thing of actually projecting their tax bill. And I use a software called Holistiplan for this in my practice and for my clients. This software is financial planner specific. There's other softwares out there for tax preparers, tax professionals. There's TurboTax has a decent calculator out there each and every year where you can do this for yourself. So this one's a little bit more nuanced. So I would urge caution. But if we can get a decent estimate of what that tax bill might be, these calculations are showing for this couple that I just brought you through. The tax bill for federal is $53,370, and for state is $11,190. So what that means is on their current path, they are going to overpay the IRS $15,000 throughout the year, $15,630. They're pretty much right on for the state withholdings, only about a $210 overpayment. So what could they do with $15,000 more throughout the year instead of giving it to the IRS? They could put it in a high yield savings account. They could use it for a family vacation. They could pay down their mortgage. They could invest. This is a planning opportunity that this couple is missing. Conversely, if we change the numbers a little bit and we assume that the one that was in the military, the one that's getting an LES, that spouse is withholding only $500, not $2,500. That brings their final withholdings to $4,700, right? So now they're going to owe, if their final withholdings are $4,700, they're going to owe about $6,000. So we also don't want that. We don't want to be under withholding. The IRS has penalties for not paying enough taxes throughout the year. So not only are we going to have to come up with a large bill at tax time, but we're also going to have to pay the IRS penalties on top of that, which really hurts. I don't know about you, but I can tell you, for me and for any clients that I've worked with, when anybody has to pay not only taxes, but penalties, even if it's like $10, they're not very happy. Nobody wants to do that. So we want to avoid that at all costs. So you might be thinking, okay, I understand I don't want to owe too much or get too big of a refund at tax time, but why would that even happen? Like, why would things be so off? And I would say the biggest mistake that I see at the root, if we're not talking about, we'll talk about all the things that can throw off your income, bonuses, business income, all those things. But people are not filing out their W-4s correctly. And their W-4 is what tells their employer demographic information about them. Hey, I'm married. Hey, I'm single. Hey, I have 3 kids. They're not filling that out properly. So typically when I see large differences and when I'm doing the math for clients, I see that their tax withholding forms I can see the pay stub data will usually show at the top, hey, married, single. Usually that stuff is wrong. Folks get married. They forgot to tell their employer that they're now married instead of single for both federal and state. They have kids. That affects how much you get in tax credits. Your employer needs to know that as well for the withholding. So these things are typically incorrect. Single versus married, joint versus separate filing, not accounting for your spouse's income. That's another big one that I see with 2 high-income professionals that are both making, 80, 90, 100K or more. Typically, your job doesn't realize that your spouse, if you tell it you're married filing jointly, it won't realize that your spouse is also bringing in $100,000. That stacks on top of your income when you're looking at the tax brackets. Your job's not going to know that unless you tell them that on your W-4. So just keeping that W-4 up to date, keeping those tax withholdings up to date, doing this on an annual basis is a really, really good practice. So some other things that can throw you off are things like a large capital gain or loss, a bonus that hits out of nowhere, your stock options vest. So that means vesting is you now have ownership of them. It's actual income to you. Rental income, business income, right? Any number of partnership income, a distribution from a syndication, any number of things that you receive income from can throw off your tax bill. So you just need to remember, if you think about your tax withholdings from your job at work, if we can dial that in and make sure that is in good shape, any other income that we receive, we need to understand what tax bracket we are in and how much we might need to withhold and pay that quarter for that bill. So what people don't understand is that the IRS wants its money when you are paid. They do not want to wait till April 15th. So taxes are actually due quarterly. So if I sell $10,000 worth of Apple stock for $10,000 a gain, let's say I bought it when it was, I guess when Steve Jobs started in his garage, right? My basis is zero, $10,000 a gain. I have to pay the IRS capital gains tax on that money this quarter. Otherwise, I am potentially at risk to owe penalties when I go to file taxes next year. So that's something that people don't understand when they get bonus income, whatever it is. You need to be paying taxes on a quarterly basis. This is quarterly estimated payments. There's due dates for those. I'll put a link to this in the show notes, the IRS guidance on this, but you can very easily go and pay your federal and state taxes online at any time throughout the year. The governments will gladly accept your money, and it is the right thing to do if you're receiving irregular income. So not only do we want to set aside money, we want to pay our bills throughout the year so that when tax time comes, we don't have a huge bill to pay. Okay, so why do this? Like, what are the impacts of good tax planning and tax projections when it comes to your withholdings, your refunds, your payments, all these things? I'll give you some examples and some reasons that this is really important. If you have better cash flows, right? More even cash flows throughout the year. If my family and I are struggling every month, like we're barely over budget every month, we're $200 over this month, then we're $100 over this month, and we're $100 under this month, and we're not going on vacation because we feel like we're over budget, and then when tax time comes and we're getting a $5,000 refund, that's a problem. Okay, we are not receiving the true paycheck throughout the year. We are over withholding, so we're artificially deflating our paycheck and hindering our own cash flow, and that's a self-inflicted wound. And I've seen this happen. Conversely, if we are spending, we're overspending, we feel like we have a lot of cash flow coming in, and then we owe a lot of tax time, we are under withholding, right? So we want to even that out and have an even cash flow throughout the year, okay? Also, when we get a large refund at tax time, what do people do with that? They think of it as like a bonus, right? like found money under the couch, like I found $5 in my couch. We should not view a refund like that. This is our money. Okay, this is our money that was supposed to be paid to us throughout the year. And because of an over withholding or overpayment, the IRS is now returning that to us, saying, here's your money back with 0% interest. Thanks for paying extra. You get nothing. You don't owe any penalty, but you don't get any benefit out of that. So we shouldn't look at withholdings that way. We get better returns on our money in life when we have even cash flow throughout the year, right? So not only if I take that $5,000 refund and I actually just receive that in my paycheck throughout the year, not only can I invest that money in stocks, I can put it in a high yield savings account, right? Anything's better than putting it in the government hands and getting a 0% return. I also can have a return on life. I can take that $5,000 and take my family to Disney World. I can go on vacation. I can do anything with it. Anything is better than giving it to the IRS for 15 extra months and having them up to 15 months and having them hold on to it. Okay. We want that money in your hands. It is yours. There's no surprises. Like there shouldn't be a surprise come tax time. If you've done good projections, good planning, your withholdings are dialed in, where any irregular income we're planning for, we're paying our estimated taxes. You've got a good tax preparer or a good financial planner. We're doing this forward-looking projections. There's no surprises come tax time. It's business as usual. There's no anxiety that's building up. People don't want to file taxes and they feel like, they have to get all the documents together. It's painful. We get it to our CPA, our tax preparer, and like we just sit and pray and hope that there's no big tax bill, but we don't really know what's going to happen. That's kind of like the anxiety that goes through most people's minds. So we want to take all that, we want to unwind that, take that out, take the mystery out of taxes and really understand, what our tax bill is going to be, what our withholdings are, and understand that we're on track to not owe the IRS a big bill or get a large refund when we go to file. I would say the last and biggest benefit of tax planning in this manner is that you are plugged into your tax situation, your tax return. You understand taxes. Okay. I'm not asking you to be a financial planner, a CPA, a tax preparer, a tax expert professional, EA, none of that. I'm just asking you to understand where you fall in the tax brackets. Understand what your withholdings mean when you see them on your pay stub every month and what this adds up to for the year and how that compares with what your tax bill is. Understand what it means when you get a refund. Understand what it means when you owe the IRS money on an underpayment or even a penalty. When you're plugged into your tax return and your tax situation, you're more likely to understand your entire financial situation. You're more likely to make good decisions, not only for this year for taxes, but for future years. That is the art of tax planning, of looking through the windshield at future years where your tax rates might be and making good decisions today to lower your lifetime tax bill. All right, so let's wrap up. In conclusion, owing on your taxes is not good, nor is getting a large refund. We want that number as close to zero as we can get it. We want to do this through proper withholdings with our employers, making sure that we're filling out our W-4 properly, making sure we're looking at our pay stub, figuring out what our withholdings will be for the year, comparing that with our estimated taxes, seeing if there's a difference. We also want to account for any irregular income coming through the door, bonuses, large capital gains, business income, rental income, partnership income, K1, whatever it is. We want to make sure we're withholding for taxes and we're paying that tax bill in that quarter, ideally, and not waiting until tax filing so that we make sure we don't owe the government any extra penalties for not giving them their money on time. And then lastly, this is all important, right? Because we even out our cash flows. We're more plugged into our money. We have a better return on our money in life, and there's no surprises come tax time. So I hope that this was helpful. I hope this sheds some light for you on your tax situation, this tax filing time where we're getting a refund or we're paying something. Hopefully this makes things a little bit more clear. Let me know if you have any questions.